You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome back once again for a little program we like to call around these parts the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. So many programs for you guys to check out in this decade-long run of options-oriented podcasting. Easiest place to find all that goodness, of course, the mothership, theoptionsinsider.com, via the App Store, via iTunes or Stitcher or TuneIn, wherever you get it. You can go to your Alexa and say, Alexa, play me the option block via TuneIn or whatever the heck you like to listen. It's on all those places. If you can't find it for some reason, by all means, let us know. I know a few of you hit us up last show saying you had some issues getting the chat work. I think there was an issue over there. On Mixler, they pushed their software updates, as these platforms always do, and as it always does, it interferes with everything. So hopefully everything should be up and running there today via Mixler. If you're having issues getting us over there again today, let us know. We'll see if we can do something. Nothing really we can do on our end, but that said, we can at least make them aware of the issue. So let us know if you're having troubles hitting up the live chat. Now, however you listen, make sure you hit us up with your questions, your comments. We love to hear from you guys. And joining me on the program today, let's start off in that mecca, that bastion of falsehoods known as St. Charles, Illinois, where we are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program, sir.
I got some real umbrage for you on that one, but good to be here as always, even with the umbrage.
Nothing I said was untrue. Is St. Charles not the mecca of falsehoods, sir?
Now I know how people feel when the media tries to put a hatchet job on them.
False news. False news here on the option.
Trying to get me to start using my Twitter account. I got to start tweeting out things on Longo.
False news. Although this is actually true, though. You pickle problem causers out there. And I used to have great respect for St. Charles, and you guys have just completely dashed all of my hopes and prayers for your town there, sir. So well done to the city fathers of St. Charles, aka those purveyors of pickle perfidy. All right, and joining me on the old program today, we are also joined by the greasiest of meatballs, Mr. Mark Sebastian. Welcome back to the Option Block program, sir. Where are you beaming in from today? Mr. Greasy Meatball, are you there?
See, he's ticked at you, too, about the bad things you're saying about St. Charles.
He's going to tell you what, in the intro, while we're waiting for Mr. Greasy Meatball to fix whatever's going on with his settings over there, Uncle Mike, he has been bugging me for so long about having his own theme music on our Volatility Views program because he's jealous of Russell Rhodes. Russell Rhodes has his own little theme for his own little segment, and he wants one, too. And so as it so happens, we happen to have one now. We're going to play it on this show rather than the Volatility View. It's probably more suitable for this show. It's not really a theme. It's more just silly nonsense. It comes to us courtesy of our friends over there at the business show at Get Businessed on Twitter. A little bit of fun nonsense from them. Check it out. You can check it out on our network feed or subscribe to the show in iTunes. If you like your business news with a dose of nonsense, these guys got you covered. And I heard this the other day, and it brought a smile to my face. So I thought I'd play it for you. A little warning: it's not safe for work. So if you listen After the fact, it'll probably be beeped, so don't worry about that. If you listen in the chat room, here you go. A little bonus for those of you who can make it live. Get the NSFW version of the Greasy Meatball theme here.
Pearl Harbor ruled.
Jesus, Pearl Harbor. Now there's a sound clip of you saying Pearl Harbor ruled.
I think that's notoriously
that's
like
crazy,
a terrible
man.
movie. No.
Pearl Harbor.
Pearl Harbor rule. 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 Pearl Harbor. How do you not like Ben Affleck?
Nah, not a.
Ben Affleck's awesome.
No, he's not.
How do you not like Ben Affleck?
Nah, not a.
Ben Affleck's awesome.
No.
Awesome. Can't go wrong with Michael Bay.
Potatoes.
Can't go wrong with Michael Bay.
Potatoes.
Can't go wrong with Michael Bay.
Potatoes.
Can't go wrong with Michael Bay. Michael Bay.
There you go, Mr. Greasy Meatball. I had no idea you were such a fan of all things Michael Bay and his action oeuvre, sir.
Well, ever since The Rock, he's been a hero of mine.
I'll give you The Rock.
And-
The Rock is awesome. The Rock is almost unparalleled as an action film. Some of the other ones, maybe it's like Pearl Harbor, perhaps, maybe more dubious choices.
No. Some of you don't like all 4 Transformers movies plus the next one coming up. What about Pain and Gain? You didn't like Pain and Gain with The Rock?
Yes, he's been on a dark path of late, shall we say? But The Rock is that's the one I always point to. Come on, welcome to The Rock, Sean Connery.
That place was amazing.
Doesn't get any better than that with when you're talking movies. And speaking of not getting any better, let's get right into it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the man said, this is the portion of the show we break down what's rocking and rolling in the week that, the week that was, and indeed goes on today, kicking it off today. A little bit quiet day on the broad market front. Everyone probably playing a little bit of wait and see, keeping their powder dry ahead of the old big number tomorrow, the first here for Feb. So most of the major indices pretty much unched on the day. Same pretty much for VIX Cash, still a bit shy of that 12 handle. Right around 11, looks like 11.87 or so. I had a bit of a range today, got up to almost 12.5, down to almost 11.5. So a bit of a range out there in VIX Cash, settling right in the Goldilocks spot, right in between those two. We'll see how non-farms affects that today. That said, let's look back at today's action, see what caught our eyes before we get into some specific names popping off here. Mr. Greasy Meatball, first off, are you sated that you have now at least had a theme of yours, even though it wasn't perhaps related to this show in any way? It was still pretty funny. And then B, what caught your eye in today's activity?
Well, we're gonna have to tighten that up a little bit, so it's a little shorter. Like maybe we can pull that into a 20-second clip, get that cut. But that was pretty spectacular. Good job by Dylan Carey on my new Pearl Harbor Rules theme music. It looked. We started off the day pretty low with vol up, and then kind of meandered higher throughout the day. Played around with down 3 and up 3 for the balance, and basically finished the day unchanged. Just a whole lot of wheel spinning ahead of non-farm payrolls tomorrow. And, if there was any movement, it was in the precious metals, which we'll get to. But gold was up over $1. GLD was up over $1.60 at one point. Settled the day only up about 0.5%, and some of the other names like that. So there was some dollar movement, some inflationary trading, but other than that, it was basically the market up, pieces kind of pushed around by the NASDAQ was down, but it was kind of pushed around by a couple of big names as it's prone to do.
And Mr. Uncle Mike, he mentioned, of course, the metals. I'm sure that was of interest to you. What else caught your eye in today's activity, sir, along with the metals?
We should have a backwards day. I should parse through the VIX now.
I know. He'll talk metals. You talk VIX. It'll be fun.
There we go. Just to add to what Mark was saying about the metals, I do think this is kind of a little bit of a reaction to the Fed not moving anything. Not that it was really a huge surprise to begin with. I wasn't expecting them to do anything this soon. Rate hikes later in the year would not surprise me, but was not expecting them this soon. But I do think it's a little bit of a reaction to it. Silver SLV was up at 1681 pre-market, but once the market actually opened, or once the cash trading actually started at 8:30, we did have a down day with it. Silver and gold have had a nice little run lately, and a little bit of leveling off would not surprise me. But other than what Mark had mentioned, there was really not a ton of movement. There was nothing really lighting up my tape on the day today. There was that fruit company that did have some movement, which I'm sure we'll talk about shortly. It wasn't today, but it was after the earnings. It did actually go higher. But aside from that today, not a ton of moves across at least what I look at anyway. And I think that may change tomorrow, though, because this non-farm has a chance at actually meaning something.
A meaningful non-farms. What will we do with ourselves? But you mentioned some of the names. There are names popping off, of course, after the bell right now. We'll get to those in a minute or two once they had a chance to digest some of their news. But let's start looking back, like Uncle Mike mentioned, at some of the big names that popped off earlier in the week. Of course, we'll start with the fruit company. You'll remember on our last program, listeners, we all kind of remarked at how vol there, at least compared to historical levels, was fairly cheap, which means if you're one of these aggressive premium sellers going into earnings, maybe you want to keep your powder dry going into that one, or heresy, perhaps even consider a long premium type strategy, which certainly worked out in this scenario. Apple going into their earnings earlier this week closed right around 121.35. They were pricing in about 4.25, so about 3.5% or so is what they were pricing in. They opened up the next day about 127 and change, so up nearly 5%. So already outperforming from that perspective. Intraday are traded as high as up about 7.5%. So again, long premium traders in terms of scalping or getting out, they had a nice run there, whereas premium sellers kind of hurting. This is, of course, a lot of that was driven by record sales, as I'm sure you've seen now from the iPhone 7. People have been, maybe part of this was their stellar downplay. Apple was good at gaming earnings for a long time. So was Microsoft. Maybe we saw a little bit of that coming into play, because we saw all these dire predictions earlier in the end of last year saying they were ramping down some of their iPhone production in China, and all this was a long way around to, I think, really beating down some of those estimates that they then blew through, and they blew through with a record number of iPhone 7 sales. So that, of course, did well. Still sitting on over $250 billion in cash. Of course, that's not including the debt. With the debt, it's less than that. But still, it's just a stunning, astronomical, mind-numbing amount of cash that they're sitting on. At a certain point, people have been saying this for years now, too. You got to put that to work. We'll see maybe if there's some more plans for what they do with that going forward. We all know cash right now, not the best returning asset out there. And then, of course, the one lone dark spot out there, if there was one, it continues to be the iPad. People just don't, surprise, surprise, they don't upgrade an expensive tablet as frequently as they do a phone. They use it more like a computer, which means probably longer than a 2-year upgrade cycle, which is not obviously keen on Apple's agenda. They want you to upgrade every year with every new cycle and buy the newest, shiniest, prettiest, fastest device you can. So it was interesting, but other than that, the market seemed to scoff at that because, like we said, it got up to about 130.5 and then rallied again, a little bit off today, right about 128.5 to close out, but still interesting stuff. Uncle Mike, it seems like the market is just completely ignoring your aforementioned innovation index. They say, Uncle Mike's innovation index, pshaw, we must own Apple. We must have it now. An impressive rally here. What's your thoughts here? Have you changed your opinions at all? Maybe you moved up your put-selling strike from maybe 75 to like 90? What's going on in Apple land these days?
What the heck? I'll move up my put-sale strike from 70 to 72.5.
Whoa, aggressive.
Yeah, that is very aggressive. No, Apple has good products. They're a good company, and they make a lot of money, and they have a lot of money. They have a lot more money than I do. Maybe not quite as much as Sebastian, but they do have a lot of cash on hand. There's a lot of strong fundamentals about it. But they're still not making the all-time highs. They're getting close. They are knocking on the doors because I believe 134, if memory serves, is their all-time high. They did crack the 130 mark recently, and it's 134. It's back in April. April of 2015. They did do that. So if they go above it, you can still make an argument of buying the all-time high and continuing to ride the momentum. But I really think that what drove Apple up to get to 134 the first time, or at least get up to the 100 level the first time, was innovation. And right now, they're doing a good job. They're selling a lot of iPhones, but we have had a bull market. Technology has been good lately, and we've had a pretty good economy in a lot of ways. So when you have all those factors, and you have something like Apple, people tend to buy the new phone or the new iPhone a little bit more often than not. So I think, it's obvious that that's what's driving it. But if this is ever going to be the first ever $1 trillion company, or if this is ever going to continue to go to the 150, 180 mark, I still stand by that they're going to need to innovate and come up with something new. So maybe it's just the street expecting the new iCar to do that.
You didn't like the iWatch, Mike? That monstrosity of a watch? Yeah, supposedly the new phone is going to be a very different from the 7 and some of the other phones, the iPhone 8, the 10-year anniversary phone. One thing I would note is that implied volatility in Apple is now at over decade lows. So if you look at a chart of like AAPL, which is the VIX of Apple, you can go back about 5 years, folks. It's at 17.5. It's never been that low, this index, since they invented it. And looking back further, you're looking at kind of pre-iPhone when they were just doing computers to find implied volatilities that are this low in this name. So there is something going on with these options. I mean, as I look, I want to own, I want to own options. I love owning options as much as I love Ben Affleck. All right, that is how strong I feel about this. That was actually something.
Is Carmen Line rocking some Apple Premium these days?
You know what? We don't trade in individual equities. Otherwise, yes. However, I did put a research note out telling people that if you are selling Apple option premium, you are officially a jerk because it is way, way too cheap to. I mean, I don't even like it for an overwrite. I think that if one was like looking to do something with Apple, I mean, options are so cheap that you could do an entire replacement with calls for next to nothing. I was looking at March 130s, which are about 1% out of the money, and they cost, with about 50 days to expire, the rental charge 1.25% of the stock. That is just nutbag low. So I think that that's kind of the key thing that I would take from those earnings, and watch for some of these other names. If they want to kill vol, I'm all over. I'm all over buying some of these options.
I like the technical nature of your research notes. If you're selling premium, you're a jerk.
Yeah, no, I know. But like we talked about this last week, or going into earnings. I think you, me, and Mike all said, when they sell the straddle off, it tends to make you pay for for being short. And I think Russell had said every now and again on Friday's Volview show, every now and again Apple makes a big 8% move. And guess what Apple did out of that earnings? It made a nasty move, exceeded at one point it was up about $8, so it was up about that 8%, 7% or so at one point. Absolutely clobbered premium sellers.
I don't know.
So you can send this to Don Schlesinger. This is an option that should be bought. You tell him that.
He will be deeply offended. In his terms, it'll be not sold. But speaking of selling premium and the jerkiness they're in, I don't know, Uncle Mike, I know 75 is your magic level. I don't know how you could walk away from these June 75 puts. You can get them for a whopping 6 cents right now. How many are you going to sell, sir?
Nah, that's too risky. What can I get for the 72 halves?
Yeah, those are A, there's none of them, and B, if there were, they'd be like no bid. So you're out of luck. Maybe 2 cents. I'm sorry, 2 cents if we were to imply. So 6 cents, not floating your boat, huh? I thought you owned that strike. Any bid there, you just lit it up. That was your strategy, sir.
Spreading lies like you are about my hometown, sir.
I spread truths about your hometown. Speaking of things that were popping off, we'll get into them. We'll hold off on Facebook for a bit because we got some big names coming out after the bell right now, so people are waiting for those as well. So let's stay in the A's with Amazon. They have just disrupting every industry known to man, it seems like lately. Amazon, another day, another headline of Amazon making inroads and encroachment into some new area. I saw recently Walmart's obviously feeling a lot of pain from Amazon. They just recently changed their whole online shipping model because of Amazon. So there's been a lot of back and forth out there. Of course, Amazon closing today, $839.75. They were pricing in about a 41.5, so that works out to right around 5% for that straddle. And in the after hours, getting clipped a little bit, maybe from these lofty levels that Amazon had been floating around at of late. Trading right around 807.5, so off nearly 4%, about 3.85%. So still underperforming from a premium seller's or a premium buyer's perspective, definitely. Happily performing from a premium seller's perspective. We'll see how this continues into the after hours and how things go. We also like to watch we used to call it the stealth apple. It's not so stealthy anymore, and the price range is completely different. So it's not really the same conversation that it used to be. Of course, I'm talking about the burritos and botulism, a.k.a. Chipotle. They closed today about 423.30. They were actually off a little bit at one point. They were trading a little higher intraday, about 424 and change. They were pricing in about 20 half or so for that straddle. Again, right around 5%. And so far in the after hours, looks like they're off about trading right around 414. So off about a little over 2, about 2.25% out there. So again, underperformance seems to be, except for Apple, which was crazy cheap to begin with. Underperformance seems to be the narrative so far of this earnings cycle. Let's go to another one that's popping off after today. A little bit cheaper name. This one's had some, well publicized drama of late. I think this and Fitbit, two of the cheapy fitness geared. One's fitness, one's action, I guess you can say, type name. This is GoPro, but a very challenging sector. Both of them competing in a very crowded space. GoPro closing today, it's just a tick shy of $11. They were pricing in about $1.25, so about 11.5%. And so far, this one actually seems exactly in line, about 11.5% off to the downside. Surprise, surprise, selling off here in the after hours because it was just crazy cakes out there. And before we wrap up, let's look back a little bit at the week that was as well. For Facebook, they were of course closed by 133.25. They were pricing in about nearly $7, about $6.70, right around 5%. Again, 5%, the magic number this week for some reason. They opened pretty close to unched, which was interesting in and of itself. And intraday traded up as high as about 135.25, so right up about 1.5%. Then selling off today, I got down, let's see, as low as 130.70 or so. So off about 2% today. So again, underperforming from an overall straddle perspective. Seems like Apple aside, Mark, we'll start with you. Underperformance is the narrative of this earnings cycle. Would you agree?
Yes, I would. So far, not a lot of names have had wild moves, like you said, other than Apple. I can think of like Under Armour had an outsized move. Ralph Lauren, but that was because the CEO was leaving. It didn't even have anything to do with earnings. So for the most part, earnings season has been about as exciting as everything else that happened in the month of January, which was the slowest, least movement month in the last 55 years. So it appears we're carrying the torch forward into February. Go us. Go U.S. markets.
Compared to last January, certainly not the most scintillating of names. Uncle Mike, I know you watch a handful of names in that strategic night. Any of these names amongst them, and any of these catching your eye from a pro or con perspective? And do you also agree with that narrative that it seems like so far, at least from the earnings season perspective, it's been a dramatically underwhelming session from a volatility and performance standpoint?
I think no doubt about it. With the underperformance based upon the straddles that we've just rattled off right away, that seems to be the trend, even with some of the lesser names, so to speak. So there's not a ton of movement going on right now. But fear not, I think there might be in the near future. So we will see. But the other thing I thought was interesting that you had mentioned about botulism and burritos gives us a whole new meaning for the term Airbnb.
Yes, indeed it does. We'll keep an eye on these throughout the show, listeners, so don't worry, we're not done with earnings. Not by a long shot, but we've got to keep on rolling with the rest of our program, getting into some of the weird and wild paper we saw today, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we break down the weird, the wild, the wonderful, the wondrous, the whimsical. You name your W adjective and throw it in there. That's what we're breaking down today. Of course, with our fedoras and our trench coats in hands, we proceed bravely down those, some may say foolishly, down those dark alleys of the options market and kick things off in a name that's not notably known for being crazy or scary or in any way really exciting. This is Alcoa, ticker symbol AA, closing today 37.68, up about $1.50 or nearly 4%. They're mostly known for really kicking off kind of earnings season most of the time. Old school name that they are. And like I said, today up about 1.5, nearly 4%. So a good day out there from an underlying perspective. Good day from an options perspective as well. This name does about 4,500 contracts a day, doing a whopping 41,000 today. About 11, a little more than 11 to 1 calls over puts. That should give you some inkling of where our attention was focused. And if you're wondering, how can I love my broker today? Well, our friend here has got you covered. He did it for you. Coming in on the Feb 39.40 call sprint. We saw it going up. Looks like paper buying the 39s, selling the 40s, doing it for net 30 cents. Doing it to kick the day off, 10,800 times as the day went on, a little bit more on the 39s to the tune of nearly 14,000 and about 11,000 and change on the 40s. Worth noting, first off, it went up 2 blocks over there on the Philly. Worth noting that there is some size open interest on the 40s there to the tune of about 12,000. So that lines up pretty nicely. This has all the hallmarks of paper coming in, deciding, I want to get maybe a little bit closer to the fire on this one. This 40 strike ain't really doing it for me. Again, I said they closed about 37.5 or so today, so about $2.50 away from that strike. Our friend here deciding he needs a little bit more bang for his option dollar, willing to spend another 30 cents to do just that again. Looks like he's reestablishing on the 39 strike. So I joke when I say it's a love your broker. We've seen far worse, but still a size $1 spread for 30 cents. You got to really want it at that point. Looking here at the year that was in Alcoa, like a lot of these types of names, it was a rough year, a tumultuous year, a roller coaster year, having its nadir back in February, then looking pretty rough again back in early November when it hit a low of about 21.78 or so. So some rough periods there in early November. Then, like everything else in the market, has been rally ho mode pretty much ever since. Like I said, closing today, a whopping nearly about $17 and change higher than there. So pretty aggressive, or close to that level. So yeah, our friend here clearly was maybe a little bit overzealous on the upside, a little bit over optimistic. Has trimmed his outlook back a little bit, and he's got a little bit of time left. He got about a little more than 2 weeks for this to come to fruition. How do you like this setup, Mr. Greasy Meatball? Would you like to go out there and spend 30 cents, about between 10 and 13,000 times to roll down for one strike? Does that fall into your risk management credo over there at Carmen Line?
That certainly seems a little bit of a stiff price, but if the guy wanted to get more delta, then this was really his only way to do so. So that's kind of my thought process on this trade. It was just a reassigning of delta. He wanted to increase his exposure. Or on the likelihood, who knows, maybe he's been short this thing and wants to collect the other way. Who knows? Wants to make sure and he's capturing profits. But my guess is this is just a rejiggering of delta.
The old rejiggering. I love the technical terms you throw around out there. But yeah, speaking of some rejiggering, let's go out to our next name. This one we talked about once or twice on the old odd block in the past, raising its ugly head yet again, this time MetLife. Ticker symbol MET, M-E-T. Closing today, a little bit rough day for MetLife, 51.5 or so off, nearly 5%, or about 250 on the day. This is the name that does about 19,000 contracts a day, doing a little bit more than that today, doing 90,000 contracts, about 3-to-1 calls over puts. Once again, kind of giving you some inkling of where we're looking, and it was once again a bit of a looks like a roll this time. This time though, not down a point. It was rolling out a little bit. It was the Feb March double, aka 55 call spread, going up for looks like paper selling the Feb doubles, buying the March. Doing it about 19,000 and change, about 19,829 times on the Febs, 19.5 on the March, a total of about 20,500 on the Febs. And let's scroll down here and about, if I can get to it, there we go, about 21 and change on the March. So a little bit more creeping in after the fact. Doing it for 62 cents on the March, 17 cents on the Feb. Went up 2 blocks over there. On the Philly, again, looks like this is someone saying, yeah, my Feb doubles a wee bit optimistic here. Name, like I said, closing 51.5, especially after today's move off nearly 5%. He perhaps realized that discretion was the better part of valor here. He wasn't going to see that 55 strike probably in his options life. So he got the heck out of Dodge and bought himself another month. And like I said, this was a pretty aggressive day, so to the downside. But our friend here isn't giving up the ghost. That's worth noting. He's not abandoning his call position momentarily. He's not even going down a few strikes, which I think some people wouldn't argue with at all. They would say, you know what, maybe his outlook has changed. Rolling down a strike or two may make sense. Our friend says, nope, I'm staying on the doubles. I'm just buying myself another month. Again, looking here at the year that was in Met, another tumultuous one, hit some dips back in February of last year, down around, about 35 or so. And then got that flirted with those levels again back in June before kind of rally ho mode ever since. Like I said, closing today right around 51.5. So our friend here thinks the party is still going, just going to be delayed about a month or so. Mr. Greasy Meatball, what's your take here on our friend still wanting to party, keeping his party hat on in MetLife, just pushing it out a month?
I don't know. That seems a little. Hopefully, this was a hedge against a short, because I don't know how much I love his thought process of rolling the whole thing back. Pretty crazy. Or the only other option is that this is some sort of paid the broker to get to do the other side, but and get to sell it pay the broker a huge commission to get to sell on the offer in March. But I don't fully understand this type of trade. It's could be maybe doesn't want to admit that he lost. I don't know. This is not something I would do.
Yeah, usually this kind of trade, you see some sort of concession on the farther out month where they roll down a strike or two or something along those lines. We don't see any of that, our friend here. Keeping that torch burning for the double strike. We'll see if his patience, if his resilience is rewarded, or if his foolhardiness is punished, as we keep on rolling into our final name, pun intended here, for our final victim. This is in your neck of the woods, Mr. Greasy Meatball. I know you like a lot of these clothiers and these retailers. This is Nordstrom's, ticker symbol JWN, closing pretty much 43.5 off, about 30 cents, or about a little 0.75% or so on the day. About 7,300 contracts a day is what Nordstrom's typically puts up today, doing about 3x that, doing about 22,000 and some change. What we saw again was the narrative was kind of spreads and rolls going up today, and this time it was all out in April. So again, with the vertical, it was the APE 47.5, 52.5, so a $5 vertical going up here. Looks like paper buying that and doing that for 94 cents, about a little bit under, just a couple under 8,000 contracts to begin with on one mega block. over there on ISE as the day went on. About 2,000 contracts more piling into the tune of a little bit more than 10,000 on the day. It's worth noting there is about 10,000 and change open on the 52 halves. So this could be another one of our friends trying to roll a little bit closer to the fire. Their early optimistic estimate being a little bit too bullish, perhaps, and deciding, you know what, 52 half, that ain't happening. 47 half is a better way. And for that 5-point roll, he's willing to pay about $1 for it, though. So interesting stuff here. Again, JWN actually not following the traditional pattern. You see a lot of names didn't actually hit his nadir back in January, February last year. It actually took all the way until about June of last year when it got a low of about 35 or so. 35 even, actually, was kind of like the low in this name. Since then, it's kind of bounced all over. It got as high as 62 back in early December. And this thing's obviously been clipped pretty aggressively ever since. So unlike the rest of the markets, which was feeling the love post-Trump, this name taking it on the chin, off about 20 handles since December 9th or so. So not the best run. Our friend here clearly thinking that's overdone and was aggressively overdone, 52 half. Now deciding maybe to get a little bit less optimistic, go 47 half. Mr. Grease Meatball, take us home. Rolls the name of the game today. I think rolls that keep the hope alive maybe is the narrative of the odd block today. What do you think of our final name/victim here, our friend rolling down here in JWN?
I like the trade a lot. I think that if you look, there are a couple of reasons to do it. There was some news about Macy's and whether they might sell themselves, and for this is a name that has lost a third of its value on what was disappointing Christmas season, but it couldn't have been that bad. So I am I look at this and I kind of like the idea. Actually, I wrote up a few weeks ago a put sale in Nordstrom because they're one of these high service ones will get by, and Nordstrom has relative to like a Neiman's, which is like super high end. Nordstrom is viewed as a lot nicer to be in than Macy's, but approachable. Neiman's is maybe a little less approachable, and so I think that this is a pretty smart play. I like it. They have earnings coming up at the end of the month, so you get some exposure. Gives the guy plenty of time, and I mean, why not? About $1? That's not a lot of money to roll yourself down an entire 5 points. He's now less than 10% out of the money to making a nice profit. So I think it's a good. Unlike our other player, I think this trade actually makes some sense.
So feeling the love. So 1 out of 3 at least here on the odd block today. 3 people keeping the hope alive, keeping the flame burning. 1 out of 3 getting a little bit of love. Speaking of love, it's time for you to love up some strategery and Uncle Mike, because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, really quickly, listeners, before we jump into the strategery, the Uncle Mike's got a quick mid-show update here on how these earnings are faring here in the after hours. Kick things off with good old Amazon. Like I said, they were pricing in about a 5% move, or about a $20.50 move. Right now, they're off about 3.75%, right around off. Trading around right around 808 3/4. They closed right around 840 today. So sell off, but still not as aggressive. The underperformance continues to thrive. Chipotle pricing in about a 5%, off about 3.5%. GoPro pricing in 11.5%, and actually the lone name, like last week when it was only Starbucks outperforming, and that was by the hairest of margins, GoPro, the only name outperforming their straddle, this time to the downside, off about 12.5%, so a full percent outperformance there. Not exactly a good night here, it seems like, for GoPro. We'll keep an eye on all these. That said, Uncle Mike, I did have a chance to chat with my minions, and they're crazy this time of year. There's so many earnings popping off, and they're already high on their jams and jellies to begin with, so it's already hard to make them out this time of year, even more so. But I did hear them. I saw a bunch of them eating apples, and they started throwing them at me. So I kind of figured maybe that meant maybe you're going to go retro a little bit today and go back to looking at some of your old Apple strategies, perhaps in a more modern context. Maybe I'm reading too much into that, sir. So were they just angry at me, or are you actually talking Apple today?
They probably were angry at you because of all the deceit you've been spreading about St. Charles.
All the truth that I say to the people.
But it is not true. But with that being said, you were able to read into the minion symbolism there. It was very impressive how you do that so frequently. I wanted to go through today and kind of go back in time to some of the earlier years of this show when I did a lot of strategy blocks on Apple. It seemed like I talked about it almost every day. The initial run-up with Apple. And I had a pretty decent-sized position in it for my clients. And it did pretty well. So what I wanted to go through today was some of the ways, or one of the ways in particular, with which I hedged going into earnings. Now, the base strategy with what I did with Apple would be along the lines of usually a 2 to 3 month long put option, and then a more near-term call option, maybe 1 to 2 weeks typically. And by doing that, we were able to have a lot of success. And we did pretty well with that over the initial run-up of it, not the initial run-up, but the run-up in Apple a couple years ago. And that was back when the innovation index was very high. And we discussed the BBI very often on this show. But there was a lot of opportunity in Apple as a hedger that was very exciting at that time. And what I wanted to go through with what I would do is I wanted to go kind of bring back some of those ideas today, just because there are more earnings announcements. And this is something that could be applicable today in this lower volatility environment, not just on Apple, but on some other stocks that you might be working with. So what I would do before earnings, we would actually have earnings. I would probably have the put option roughly 5% out of the money, and the short call option probably about the same. And so with that, we were able to get some income on the short call option. But what was happening was that going into earnings, we would get some really large moves on Apple. After the earnings announcements were creating some very large moves on Apple. So after a while, I thought, well, this is ridiculous to have this covered call in place. And I worked with doing call spreads. I did a lot with Apple. And if you ever want to hear a lot about my old Apple adventures, they are archived for this show, a couple hundred or so episodes back. So then going into earnings, we would then have to do something. I didn't have to do anything. You could pretty much just have long stock, long put and do pretty well with it. But what I did that really helped me a lot is going into earnings, I would actually use a back spread. And so what was exciting about that was that the back spread was so insanely cheap at the time, I just could not resist. I was a degenerate premium buyer, as Mark would say. But then again, if I was a premium seller, he'd call me a degenerate premium seller. So either way, I'd be degenerate. But with that being said, what I would do is I would actually go with a weekly option back spread. And here's the benefit of that. You could either do it for a back spread, just so you know, is that you are buying more options than you are selling. So for example, what you would do is you could do a callback spread to where you sell an at-the-money call, buy 2 out-of-the-money calls, or a put-back spread to where you buy an at-the-money put, let's say, you sell an at-the-money put and buy 2 out-of-the-money puts. And the idea is that if you get a ton of movement either way, you're going to have a nice profit depending on which way it would go, or a small profit if it went the other way. If it stays the same, that's when you would have problems. But Apple would seldom stay the same at that stage of life. So when putting on a back spread, oftentimes what I would do is I would buy an at-the-money, typically an at-the-money call option. And then I would sell an at-the-money call option. And then I would buy 2 out-of-the-money call options. So if Apple stays the same, then it's not going to work out so well because the out-of-the-money call options were more expensive than the at-the-money call option was. And so it wouldn't work out. But if Apple were to go down significantly, then we could, and I'm sorry, it was previously slightly in the money. If Apple were to go down to where it would be out of the money, meaning have a bad earnings announcement, let's say, then usually you can do okay with the back spread. However, and by okay, I mean you might make a couple pennies, you might get out of it at break even, and that was the goal of it if it were to go down. I didn't want to have too much downside hedge on because I already had that long put option on there anyway. However, if Apple were to go higher and significantly higher, as it oftentimes did, then what we'd be able to do is benefit from the back spread to the upside. And that was an area to where we had a lot of success with that over the course of probably about 4 to 6 different earnings announcements, if I remember correctly. And the other thing, once that started to go well, what we could then do is we could go back to selling a covered call on the underlying, combine that with doing this back spread. And the ideal way for that to end is you would want it to be go high enough to where you're right below your short call option on your covered call. And combine that with the back spread, it would make for some very interesting trades and some very entertaining strategy blocks. So what I want to leave you with today is that if you're in a stock and perhaps you are doing some type of hedging or maybe you have a collar on and you're expecting an outperform on the options, which obviously has not been the case, but if that is what you're expecting, we have low enough option prices to where even if you're wrong, this probably won't burn you too badly depending on which stock you pick. Now, obviously, I cannot guarantee such things, but what I would encourage you to do is at least make a paper trade on this or follow this somehow to where you can actually use a back spread combined with a hedging strategy going into earnings. And that's something that could possibly help you with your trades. Because let's face it, when you're a hedger, you're the most unpopular person in town because if the market goes up, those silly hedges, why do we bother with these hedges? And if the market goes down, then all of a sudden, well, that's what it's supposed to do. There is no love for the hedger, folks. I can tell you that. And doing some back spreads is a kind of a nice little way to add something to a hedged portfolio that might give you some benefit if the stock does go your way. And that is the strategy block for Groundhog Day 2017 as we look back on the Apple that once was.
The Apple that once was. I like that. Maybe that's a title for our show. I like your idea there, too, of maybe parsing out, because I've been talking about doing best ofs for a long time. We're going to get that rolling. But maybe also parsing out some of our show segments by underlines. People can go back and check out what were people talking about on Apple. A lot of people would like that, or Facebook, or Pick Your Poison, VIX, a lot of those. But we could pick our poison on the underlying and maybe start sorting those out. So if you want to say, hey, what was the skinny, what was the debate, what was the hubbub on Amazon back in the day, whatever, we can pull that out for you. So it might be an interesting idea. You got my gears turning, Uncle Mike. Speaking of turning, your gears are obviously turning out there too, listeners. It's time for some of your questions with the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, you guys know how to hit us up all those ways. Plus, if you are in there live, you can hit us up live like some of you are doing right now. A lot of you guys like to also listen live. Hit us up via Twitter. It's all right. We allow that too, or stock twits or the other ways too. Let's kick things off. Speaking of Twitter, with our question of the week. Got another straddle battle going on. It is that time of year, pitting earnings straddles against each other. So far, at least, it's all been a big resounding meh in terms of how they're all performing. We asked you guys which stock will outperform its straddle by the largest margin this week. You guys guessed before the votes have adjusted in the few days since. What do you guys think is winning our poll, right? Regardless of how things are performing right now in the after hours. That may skew the numbers by tomorrow, but right now it hasn't. So what do you think is winning our poll, Uncle Mike? I'm sorry, I should give you the names probably, shouldn't I? Apple, Facebook, Amazon, and Chipotle.
I think Apple is winning the poll.
Interesting. Mr. Greasy Meatball, how do you feel there, sir?
Apple was winning the poll. Maybe... No, I'm going to say Amazon was winning the poll.
Smart change, sir. It was indeed Amazon, currently leading with 40%. This poll goes into the weekend, but after today, it's kind of a done deal, so get your votes in. 40% for Amazon, 33% for Apple. Apple close number 2, and then Facebook and Chipotle have kind of been jostling for third. Right now, it's Chipotle ever so slightly with 14%, Facebook with 13%. We all know how this one's playing out, though, so far, with not a lot of love. Speaking of which, let's check in Amazon getting the win for the votes to see how it's doing. Off about, it's getting closer. It's off about looks like about nearly 40, 38 bucks right now. So about 4.5%. If the downside continues, we shall see how that progresses. Well, Amazon may be starting to threaten that straddle, maybe not as underwhelming as we thought. Mark, we were talking before about, what was it? I think MetLife. We were saying, how someone was rolling down when the stock drops 5%, they roll down to the same strike. Why would you do that? We were kind of debating that. Looks like Richard Howard writing in here saying it's intriguing. Could it be that this person knows something that we don't? Or is it just hubris? Excuse me. We talked about this already. I think it's probably a lot more of the latter than it is the former. I think if he knew something, he wouldn't need to roll. He would have a lot better timing and strike selection. So usually when there's rolling, they don't know something, and could be the timing element, could be the strike element. Our friend here, clearly the latter. So Richard is apparently into Met. We'll see how this one plays out. It was one of our many rolls here on the day today. All right, speaking of straddles, we got a couple of questions on these. Let's do both of them at the same time because they're kind of similar. The first one is from Jeff, but the old school spelling, the Geoff, the Joff spelling, which I kind of like. I see a Joff, I want to just doff my cap to them and say, tally ho, sir, good morning to you. But Jeff writes, are straddles really better than analyst estimates for predicting stocks? And then Bob asks a kind of related question. Low handles today, nothing too creative. Bob and Jeff. Bob asks, concerning earnings, I've been told to take an at-the-money call and put and add them together, and that is the expected move. Is that correct? We'll start with Bob first. Yes, you are correct. It's the straddles, what we've been talking about a bunch here on the show and a lot of our shows. And the nice thing about straddles is that they are indeed as simple as you just laid them out. So even a very novice person a neophyte for options could really come in here and intuitively understand what this means in a few minutes. This one's $2, this one's $2, add them together, $4, bam, $4 expected move in the underlying within this time frame. It's a very intuitive thing, which you can't say about a lot of options, quite frankly. There's a lot of Greek literally built into them, but straddles are nice, they're intuitive, they're easy to understand. And to get to Jeff's question, are they better than analyst estimates? I mean, obviously this is a subjective thing, and analyst estimates are a little bit different because they're kind of predicting direction and things like that too, and stock targets and all these things. But that said, I always favor where the actual money, the actual capital is at risk as a much better predictor. I think every study, every analysis I've ever seen, and just looking at the markets anecdotally over years, shows you that where actual money is being wagered and analyzed and spent is always going to be a better predictor of anything than some sort of just out of the ether analyst prediction. That said, straddles are kind of bi-directional, so they don't really give you a direction. There could be a little bit of a call or put bias. You could dig into that way, obviously, but still, straddles are kind of just here's the percent that's going to move. It's very straightforward. I tend to like them better. Uncle Mike, let's start with you. What do you have to say? Either for I'm going to call him Joff. I just like that, Joff, or Bob, who want to know, is that what a straddle is, A? And then B, do you like them better than analyst estimates? I have a feeling I know which way you're leaning, but have at it, sir.
I do believe, yes, that is a straddle. That I would agree with that answer. Are they better than the analysts? I would say most of the time, yes. Occasionally, the analyst is going to be more accurate, and the only reason that I say that is because I have a belief that there is at least one good analyst out there. I can't promise that or guarantee that, but I do have a belief that there is at least one. Most of the time, folks, though,
and you believe more than you have a stronger faith than I do, Mike.
I think there's at least one. I'm an optimist.
I think analysts are the definition of financial herd mentality. Very rarely is one willing to step up and do anything. I mean, if you look at like a name like Amazon, how many analysts have a buy rating on Amazon and it's down $40? I mean, the especially on the sell side guys. So it is just absolutely, those guys are just terrible, and they
didn't say I could give you a name.
They don't do the research. They don't know. I mean, they do the research they do basically involves, having no idea what's going on, especially in the tech community. Now, here's what I will say: there are some analysts that specify in retail that are very good, because they actually.
So there is one good one out there, though.
All right, yeah. I mean, but most people aren't paying attention to. That's the one industry where people that are good and do their channel checks can figure stuff out. These tech analysts are just insane. They're such a herd, and analysts tend to be the last to the party on both ends. They'll hold a buy rating too long, and then they're too late to say, "Oh, this should move," and it's time to buy this. I mean, very rarely are these people out front. They are collectively a group. It's very much being an analyst is very much like being in compliance. It doesn't really pay to break the mold on individual equities, and actually they want that CEO access, so they're only willing to say so much or go so negative, or the companies will just stop talking to them.
Yeah, that's the problem right there, is people don't think of it this way. You use the analogy of compliance. I use the analogy of they're more like better paid journalists, really. That's a similar job. They have to follow these companies. They have to get kind of cozy with them in order to get the access that they actually need to do their job. So by doing that, almost by definition, there's a bit of a bias there. And all those biases and things, of course, the company could have some other corporate relationships. As part of Dodd-Frank was trying to strip out a lot of those cozy relationships and conflict of interest between trading and analysts and research and all these other things that kind of exist there on the street. And it did, some may argue, a good or a bad job depending on which way you're looking at it there. But that said, there's a lot of those biases built into those analyst numbers that aren't there in the straddle. The straddle is just raw numbers, which is kind of nice. It's raw money on the table. There's no, we have a banking relationship with these guys, so I got to kind of be nice with them, or any sort of other deal like that. It's really kind of just straightforward, which I kind of like. So yeah, I lean that way too. Maybe the one or two good ones, but at the end of the day, I definitely lean where the hard dollars are at risk. All right, great question, everybody. Now we got to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Let's do one final quick checkup on our earnings, names, our victims, and we'll get into what we're watching around the horn here into the weekend. Chipotle up about a little less than 1.5%. They were pricing in again a 5% move, so underperforming there. Good old Amazon, they were selling off pretty hard. Let's see how that's going. Sell-off is ameliorating a little bit, only off about $35 now for about 4.25. So they were flirting with that 5%. I think maybe briefly touched it, but now bouncing off that a little bit. And last but not least, the GoPro here. They were selling off pretty hard, and they're still selling off pretty hard. They were pricing about 11.5% off, nearly 14% right now, or $1.50 right now in the after hour. So not a good day to be on the action cam side of the fence. That said, there is some stuff to watch the rest of this week into the weekend, including, Mark, there's something here coming up. I don't think it's called Nun Farms. I think people watch nuns go farming. Is that what that is tomorrow?
Yes, nun farm payrolls. It's when all the nuns of the Catholic Church get paid.
And they do some farming as well. It's a good indicator, I hear, for the economy.
Yes, so that's a big one. Yeah, we got non-farm payrolls tomorrow. That's going to be interesting. Obviously, they're not looking for anything crazy out of that. But, you never know when that can move, especially when it's a real outlier one way or the other. Then we got more earnings next week, and we've got an entire weekend for Donald Trump to say something. So who knows?
That is a lot of time. By the way, Uncle Mike, Mark just left my Nun Farms joke just lingering out there. It was gold. It was genius, and he just stomped all over it. So what have you, sir, for the Nun Farms, as well as what else you're watching for the rest of this week into the weekend?
Well, yeah, I think that the Nun Farms, depending on if how many people have gone to confessional and what the offering plates are doing. It could definitely be a market mover, but I know there's not a big expectation right now. The other thing, there is some football game going on this weekend, so I forget what the correlation is, but isn't it if the NFC wins, and that means we're going to have a bullish year in the stock market, or what's the joke that they have?
I have no idea. That does sound familiar. Here's what I will say is that the over-under is 59 points, which to me is just insane, especially given the fact that, typically, the New England Patriots, neither team scores a lot in the first quarter. So I think that if you want what I'm going to be watching, I'm going to be watching that over-under in the big game, because we're not legally allowed to call it by its actual name. Correct, Mark?
Something like that. Yes. So
you're selling the over.
So you're selling the over, huh? You're selling the over, huh? I could see some logic to that, even though I am an old school Pats fan from way back in the day. Less so, a bit of a lapsed Pats fan these days. I like them back when they were red and terrible, as opposed to blue and good. So a little bit of a different team these days. But that said, maybe my old school Pats heart may have to go off the over, just for fun. Even though I probably cold-hearted analysis side probably has to agree with the sale. That said, probably look at some Buffalo Wild Wings and a few other names out there. Probably going to do good this weekend. Wings, always go bullish Wings into the Super Bowl. And that music means we come to the end of another epic journey. We had talked Apple, we talked Facebook, we talked Amazon, we talked Chipotle, we talked GoPro, talked MetLife, you name it. We pretty much hit on it on the show today. We covered pretty much almost about every sector you could think of. If we missed one, we apologize. It's only a 1 hour show. But before we go, as always, let me check back with my cohorts, my partners in crime, see what they're cooking that may interest you. Let's start with you. Let's go to Uncle Mike. Let's cook it in the land of all things pickles. Oh, wait, I'm sorry. There are no pickles there.
Oh, you're putting me in quite the pickle here in the current water garden capital of the world, St. Charles. But with that being said, I guess the only thing I have to say today is thank you to everybody who's keeping me busy right now with new business. If there are more people interested in either trading on the platform and getting occasional advice, but being their own self-directed traders, or having a financial advisor, shoot me an email and I can put you on a waiting list. And in the meantime, feel free to go to Amazon and buy my book, Go Long New Option Strategies for Buy and Hold Investors. My email is mtosaw@rcmfs.com, or feel free to give me a call at 312-212-3531, and I can get you on the waiting list, and we can probably talk most likely in mid to late February.
There you go. I like it. Uncle Mike, too busy, so don't bug him. But if you want to bug him, go ahead, and then he'll put you on the wait list for February. I like it. Uncle Mike, too busy. Too much put rolling to do to be bothered with you. That should be on your business card. I like it. All right, and before we go, Mr. Greasy Meatball, what's cooking in the land of all things Gamma and Row and all the other webinars you guys are doing?
Gotta love it. Yeah, so just as an add-on, I've referred a couple people to Mike, and they are very, very pleased. So if you want to call that an endorsement, then call that what it is. We have a webinar on owning premium and being long Gamma on Saturday. It's a 3-hour Saturday course. It's going to be awesome, and it's going to be completely worth your time, and you can watch it live for $197 minus coupon code 25_OFF, all caps, and it's just $172, and then you're good to go. We're going to sell it in our store after the fact for $300, so save yourself some dollars and attend live. Optionpit.com/gamma.
There you go, optionpit.com/gamma to learn more about the gammas and the rows and all the other fun stuff out there. On behalf of the Greasy Meatball and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. Looks like the chat worked good today, so no problems there. If you had some problems, let us know. We'll pass them along to the folks who handle that stuff and tell them get their acting gear. But it looks like everything worked, so bally ho for that. Remember, if you like the live stuff, tune in tomorrow, noon Central, 1 p.m. Eastern for volatility views, followed hot on the heels, 1:30 p.m. Central, 2:30 p.m. Eastern for TWIFO. This week in futures options. If you like all things commodity, option, volatility, etc., volatility skew, we go deep on that program into that stuff. So check it out, and we'll see you next Monday for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.